Hello and welcome to United States Chart Company online video trading lesson. My name is Trader Jim and I'm your host for these video sessions. This weekly instructional video is offered to all US Charts online subscribers absolutely free. Let's get started with today's session. Welcome to this week's lesson. This week I thought I'd do something a little different, and I think maybe we'll try to do this at least once a month from this point forward if it works out okay. What I'm going to do is I'm going to review some of the questions that were asked at our most recent chat and maybe just add a little bit more to those questions. And we'll just spend a couple minutes going over a few of the things that kind of jumped out at me, and I think it will help you folks in the long run. So let's go ahead and do that now. So the first question we're going to look at today is from Robert in Tempe. And Robert says, I'm just starting out learning paper trading. Which current market should I be looking at? Well, I mentioned to him that there's really no straightforward answer because there is really no best market. At any one time, there are half dozen or more different opportunities available. But that said, one of the things you want to do is you want to look at the front month market, and that is found at US Charts Online in TrendSeeker. And to get to TrendSeeker, you just click on the tab and you're there. And here's the front month in the second column. That's the month we want to focus on. Now the exception is going to be if you're in a market, for instance, right now it is the first part of November 2006, and you're not going to really want to look at November orange juice if that was indeed the front month. Right now I know it's happened to switch over to the January contract already, but when you get into situations like that where you have the current date is close to within a couple of weeks or so of the last trading day or first notice day of the month that you're considering trading, you might want to move out to the next month. But I'd look at the month that has the most volume and open interest. And probably your best bet to do that is, like I say, just looking here at the front month that's listed on TrendSeeker. Now to expound on that a little bit more, you can also go to, of course, the chart book and look at Ken's chart book. There's markets that we list in there, and generally try to update the chart book 2 to 3 times a week, just depending on how busy I am, and how much the markets are moving. That's really what sets the tone for whether I update 3 times a week or just 2, because if the markets aren't really moving, there's not a whole lot to say at any one time. And of course, the last thing you can do is also review the Friday emails. The Friday emails, if you're not getting those Friday emails, be sure you call one of the course counselors to make sure that they have your correct email address. The other thing is, too, you can log into the WGB member site at www.wgbmembers.com. Click on the login, enter your username and password, the same one that you usually use for the US Charts, and then click on the mailbox, and they're all right there. And last but not least, of course, feel free to give a course counselor a call. They're available Monday through Friday from 8:30 to 5 Pacific, and they can be reached at 541-955-2885. And our next question came from Rexburg, and the question was, how do you figure your risk to reward ratio? Okay, here's how you do it. If you're looking at your futures chart, and let's assume that we're taking a long position or we want the market to go up, so to determine a risk, we're going to take our entry price minus our stop loss. So if we were trading corn, for example, and we are going to enter corn at 300 and we put our stop at 290, our risk is the difference between 300 and 290, or 10 cents. Our reward would be our entry subtracted from our potential profit target. So if our profit target, we'll say, was 330 and we get in at 300, we have a difference of 30 cents there. So we have 30 cents reward, 10 cents risk, a 3-to-1 risk to reward ratio. The neatest thing about all this is that US Charts Online will calculate it for you automatically. Let's take a look at that right now. Here's a chart of December 2006 corn, and let's just go ahead and do the risk reward calculations. And we'll let US Charts Online do it for us automatically, and I'll show you how to do that. You come over here to the toolbox, you click on risk reward. Let's say we're going to get in at 300. We'll use the same example I just chatted about. So we'll type in 300. Our stop price is going to be 290. Our target price is going to be 330. And we're going to go long. And we're going to say one contract. And there you have it. $1,500 reward and a $500 risk. $1,500 is 3 times greater than the risk of 500. The other way to do this is to come over here and you click on your chart. So where you're going to get in at. We'll say right there, and we'll put our stop. We'll say we're going to get out right here, and our target price is going to be right up here, and we're going to go long one contract, and it gives you basically the same thing, but you will notice that the numbers aren't going to be as accurate as if you type them in manually. You can do it either way, whatever suits your fancy. And of course, then you can place this text anywhere on the chart just by clicking the place text box and then clicking on the chart. Okay, the next question was from Landman, and he says, I've been paper trading with huge amounts of success and have made the decision to move into the real deal. Any tips or advice you may have in making the transition would be greatly appreciated. My number one tip is to have a plan completed and absolutely stick to it. Develop that plan. You do that ahead of time prior to entering the trade. Once you find the setup that you're interested in, you determine your stop loss point and you determine a potential profit target. You don't necessarily have to exit at your profit target, but here's what I'll typically do. You get in the market, and as the market begins to move in your favor, you trail your stop loss. And so your plan should also contain at what points you will move your stop loss to help protect any accumulating profits. So the plan is very, very important. The other thing is always use a stop loss. Always use a stop loss. And don't get greedy. So many new traders get into the market and they just figure that they're in the position and this thing is going to go to the moon. And very, 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 very rarely does that ever happen. You have to protect your trading capital and you have to have an idea of what you're going to do. It's no different than the store owner. For those of you that are in business out there, you buy inventory and you have an idea what you want to sell that inventory at to make a profit. Well, it's the same thing with trading. You have to have a profit target in mind. So with commodity trading, you are a business owner and you got to treat it like one. Don't gamble with it. If you want to gamble, go to Vegas or go to Atlantic City. This isn't about gambling. You got to treat this like a business. And our next question, Doc asks, do you think Williams %R is a good indicator? And I just flat out said, I don't use indicators. I use the chart patterns and support and resistance. Which brings us to the next question from Pseudo. Pseudo says, I appreciate your opinion on indicators. I always like Ken's simple ways, and these were graying my hair. I'll move on. Well, the biggest thing that I said to Pseudo here is, congratulations. Otherwise, you'll be hunting for that magical indicator. And I let him in on a little secret. I said, you know what? There's not a single magical indicator on the planet. Your best bet is to study price action. You'll go a lot further than this. And what I mean by that is you just watch the price bars and watch how they develop the various patterns, the 1, 2, 3 formations, the channels, the pennants, the triangles. The price bars will develop those patterns, and you study that and be able to recognize that. I mean, you'll get to the point eventually, if you do this long enough, that you'll be able to flip open a chart and you'll see that formation jump off the page to you. You won't even have to draw the trend lines or mark the 1, 2, 3s because you've trained your mind enough to be able to realize these patterns. So that's what I would focus on. And our last question came from Gonzalo. How long should I paper trade? The biggest thing with paper trading is paper trade, and paper trade, but paper trade until you're comfortable. In other words, you're comfortable with the strategies and all other aspects of the business. For some people, that's 3 months. For some people, that's years. About a year and a half ago, I met a gentleman at one of our seminars, and he'd actually been paper trading for 10 years. That is probably a bit excessive, but the point is, paper trade until you're comfortable, and only you know when that is. Okay, next I want to just talk real quickly about the WGB members site. A lot of people don't use this, and there's a lot of information that's stored here and things that you may not be aware of, so we'll just quickly talk about it here. Okay, so to get here, you're going to go to WGBmembers.com, click on the members login, type your username and password, click on the mailbox, and you'll be brought right here. And you'll see here that we have a number of different things in here. We have our weekly Friday emails always dropped in here. So for some reason you don't get the email on Fridays, always come here because it is posted here. We also post the It Just Happens and It's About to Happen alerts here as well. Something new that we're giving a test run to is we are posting the videos in here every Friday, and here we're posting a streaming video. So for those of you that are on a dial-up, you might want to give this a shot because it's streaming from our servers and not something that you have to download like in the Flash format. So give this a try. All right, I think we have 1 seat left for the January trading camp, so if you're interested in that, be sure to give a course counselor a call, and they can be reached Monday through Friday from 8:30 to 5 Pacific time. The number is 541-955-2885. All right, that's this week's update. I'm Trader Jim. Have a great weekend.